I'm not going to waste your time. The hardest part about building a $5,000 portfolio is not buying the tokens. The hardest part is creating a plan that will take your $5,000 and turn it into $50,000, and then maybe into $500,000 or $5 million. And that's why this video is different. Because in this video, I'm going to show you how to build the ultimate crypto portfolio with $5,000. In fact, I'm not only going to show you which tokens to buy, I'm also going to give you an investment framework that will show you when to buy the tokens and when to take profits. And when I'm done, I'm going to take that portfolio and I'm going to give it away to one lucky subscriber of this new channel. I'm CryptoManRan and I've been around for 10 years. I've invested in over 1,000 companies, and doing that, I built a multi-$100 million portfolio. I started this channel to build the most profitable community in the world by sharing my strategies with investors just like you. So if you want to join us in this amazing journey, subscribe to the channel, hit the notification bell, and then let's go and make some money together. Let's jump straight into how we're going to take your $5,000 and turn it into $50,000, $500,000, and then maybe one day, hopefully $5 million. The first thing we have to do is we have to start with a framework. And whenever I invest in any portfolio, I use a very simple 5-step framework. The first part is creating a market thesis. It sounds complicated, but it's actually pretty simple. Do you think the market's going to go up, or do you think the market's going to go down? Well, I believe the market's going to go up in the next 3 months. In fact, no. I believe the market is going parabolic. And that's not just a thought, because the crypto market runs in 4-year cycles. And as you can see from the last 2 cycles, in the post-halving year, the post-election year, this is the time when altcoins go parabolic. And it's about to happen again. So I guess if you're watching this video right now, you're lucky because you've come in at the right time. You've come in for the most aggressive part of the crypto bull market. And so that's my market thesis. The next thing is you got to create an investment thesis. And for here, we have to cover our broad assumptions for the crypto market. You need to understand why some tokens are going to win and some tokens are going to lose. Now, here's my crypto investment thesis, right? I believe that blockchain is about the creation of digital value. That's all it is. This whole technology, Bitcoin, ETH, all it's about is about the creation of digital value that you can send over the internet. And if people create digital value, then what are they going to do with it? Well, they can hold it or they can trade it. And so that forms the basis of my blockchain thesis, right? My blockchain thesis says that if blockchain is about the creation of digital value, then people are going to create digital value and they're going to trade digital value. And what I want to do is I want to own the areas where they create the digital value, the layer 1 blockchains, Bitcoin, Ethereum, Solana, Sui, etc. And then what I want to do is I want to hold the exchanges where people trade this digital value. I don't really want to hold too many projects because there's a high probability that the projects are going to collapse, right? AI projects, meme coin projects. I want to be at the place where regardless of what projects are created, I get to capture the value. And the best place to do that is on the layer 1s and on the DEXs. You got it? All right, well, let's go on to the next part. The next part is where we define the amount of capital we have to invest. Now here, you've already told me you got $5,000, right? If you got $5,000, I've got really good news for you. $5,000 is the ideal amount of money to start building a long-term crypto portfolio. Why do I say that? Well, it's because having $5,000 is not the same as having $1,000. With $1,000, you need to take some really big risks to get your portfolio going, right? With $5,000, it's not like that. If you do have $1,000, I made a special video on this channel, and there's a link below for people who want to invest with $1,000. $5,000 is an amount that you don't want to lose, and it also allows us to get a broad exposure to a large number of crypto tokens. We can take some safe bets, and we can take some risky bets, because we want to grow this portfolio consistently. Now that we've done that, we need to define the amount of risk that we're willing to take. And since you've got $5,000, we're going to take risks, but we're not gambling. We're not rolling dice. We're going to be responsible here because this is the basis for your crypto foundation. And so what we're going to do is we're going to put 40% of our investment into the layer ones that I spoke about, 40% of our investment into the trading platforms, and then with 20%, we're going into dirty, dirty meme land. All right, so now you've got the first 4 steps. The last step is the simple step. It's selecting the actual token. All right, so let's get into it. Let's select the 10 or 15 tokens that we're going to put into your crypto portfolio. Remember I said that the first part of your portfolio is going to be 40% of your portfolio into the safe bets, the layer ones. So let's start selecting the layer ones. Firstly, I'm going to put 10% of the portfolio into Bitcoin. You heard right. Even though you've only got $5,000, we're going to put 10%, $500 of your portfolio, and we're going to put it in Bitcoin. When you've got a $5,000 portfolio, you've earned the right to start holding Bitcoin. Even though it's not going to give you the best or the biggest returns of the cycle. Remember, when you've got $5,000, your objective is to start accumulating Bitcoin. And this is the first step in doing that. So the first token we're putting into the portfolio is we're putting the king. We're putting Bitcoin in and we're spending $500. All right, then we move on to ETH. Now look, I'm not a big fan of ETH. The technology is slow, it's expensive. Hey, but this is not about me, right? This is about Wall Street. And Wall Street love ETH. They're building DeFi on ETH. They've got an insatiable demand for ETH. The treasury companies keep buying ETH. The ETFs are exploding with ETH. And if I look at the ETH price action, well, ETH hasn't yet started performing in the cycle, right? ETH will probably only perform at the end of the cycle, just like it's done in every other cycle. So what we can say is if we're buying ETH now, that's perfect timing, right? And so what we're going to do is we're going to put another 10% of our portfolio into ETH. The third token that we're buying is, you guessed it, Solana. We can't ignore Solana. Everything's happening on Solana. It's the fastest chain, it's the cheapest chain, it's got the most active addresses, meme coins on Solana, NFTs on Solana, DeFi is on Solana, everything's happening on Solana. We can't ignore Solana. And so that's why I'm putting another 10% of our portfolio into Solana. That's 30% of our portfolio allocated. We've got the 3 biggest blockchains in our portfolio. Now I'm going to take 5% and 5% and allocate it to 2 smaller layer 1 blockchains. The first one is 𝗬𝗎. And the reason why I'm allocating to 𝗬𝗎 is a very simple one. Every cycle has a new blockchain that shoots the lights out. And in this cycle, I think that blockchain is going to be 𝗬𝗎. In the last cycle, it was Solana, and we all know what Solana did, right? I made a full video on why I added 𝗬𝗎 to my portfolio. And if you want to watch that video with the top 5 reasons why I did it, you can just click the link below and it'll take you to that video. The last of my layer 1 blockchains is one that not many people are talking about. I'm going to allocate 5% of our portfolio to 𝗏. 𝗏 is the token for the Telegram ecosystem. You know Telegram, the messenger app that nearly 1 billion people use? Well, they have a token and it's called the 𝗏 token. Now, 𝗏's technology may not be the most revolutionary technology, but there's no other crypto app in the world that has access to nearly 1 billion people on their phones, right? And so that's why I think we need to put some of our money into Telegram. And that brings me to the end of our layer 1s. We've deployed 40% of our capital, 10% into Bitcoin, 10% into ETH, 10% into Sol, and then 5% into 𝗬𝗎 and 𝗏. 40% of our portfolio is allocated. We have 60% to go. And now it's time to go into the trading platform. 40% of our portfolio is going to go into these trading platforms. And we need to pick the winning trading platforms. The first one that I'm going to pick is Hyperliquid. The reason why I'm buying Hyperliquid is because perpetuals are the most advanced form of trading. That's where the exchanges make the most money. Hyperliquid is the biggest decentralized perpetual exchange in the world, and it's the only perpetuals exchange that's been able to dent the centralized exchange market shares. I've used it. It's one of my favorite exchanges to use, and the experience is absolutely amazing. So what I'm going to do is I'm going to take 10% of our portfolio and put it into Hyperliquid. Next, Aerodrome, the biggest DEX on Base. Guys, you can't ignore Base. You know why you can't ignore Base? Because Brian Armstrong and Coinbase have decided that they're going all in on Base. What's the biggest DEX on Base? Aerodrome. And the truth is that if you don't own Aerodrome, there's really not many other places to get exposure to base, right? All right, now we move into the third one. And here, I'm moving on to the biggest exchange on Solana. And that's, of course, Raydium, right? I already told you that everything that's happening is pretty much happening on Solana. Meme coins, AI agents, internet capital markets, all happening on Solana. And where are people trading this? Well, on the biggest DEX on Solana, which is Raydium. And so that's why another 10% of our portfolio is going into Raydium. Now we're going to take two smaller bets in this section of our portfolio. The first one is Drift. Drift is like Hyperliquid. It's a perpetuals exchange, but it's built on Solana. The fully diluted valuation is much cheaper than that of Hyperliquid, but this exchange is growing really fast. And I think that if it does take off, we can turn the 5% that we put into Drift into a much bigger part of the portfolio. The last trading exchange that I want to add to our portfolio is one that's called Curve. Now, most people don't understand what Curve does. Curve is an exchange that allows people to trade in and out of stable coins without losing a lot of money on slippage. So why am I all in on Curve? Well, you all know that Trump signed the Genius Act, right? And you all know that Trump and Scott Bessent have said that the main thing is that they want to win by creating the US dollar as the stable coin of the blockchain, right? Well, if they do, there are going to be multiple different USDT or US dollar stablecoins. Where are people going to trade in and out of these stablecoins? If you want to swap your USDT to USDC, where are you going to swap? The cheapest place to do it is an exchange called Curve. And it's an exchange that is very, very, very fairly priced at under $1. And I think it's got massive upside to maybe $3 and even $4. And so I'm putting Curve into our portfolio. Okay, now we have 10 coins allocated to our portfolio and 80% of our portfolio spent. Now we're going into the degen territory. We're going into the place where we're either going to generate amazing, amazing returns, or we're going to blow ourselves up and get completely destroyed. The truth is, though, that when you've got a $5,000 portfolio, you can afford to take risks with 20% of your portfolio. 80% of your portfolio is sitting in great assets that are going to grow 3, 4, 5, and 6x. But now it's time to take some really big bets, right? This is the part where we're going to go with all or nothing. And if we do get it wrong, we've got to be okay with losing 5% of our portfolio in one coin, right? So let's talk about the coins that I'm adding at this part of the portfolio. The first one is not technically a meme coin. The first one is meme coin infrastructure. And that's, of course, Pump Fun. You may have heard me being very, very, very vocal about it, but this company has $2 billion in cash. They created the meme coin trenches, and they're trading at a fully diluted valuation of just over $3 billion. Now listen, if you've got $2 billion worth of cash and you can't create more than, say, $5 billion for your token holders, you shouldn't be in this game. And so the first one that I'm adding into the portfolio is Pump Fun. All right, enough safe plays. It's time to go into the meme coins. Now here, guys, I really, really, really can't help you because there are no fundamentals when it comes to meme coins. Either you pick them right or you don't pick them right. You got to choose meme coins which appeal to you, which have strong communities, and then ultimately it really, really, really becomes a gamble as to whether those meme coins can create attention. I'm going to choose 2 big meme coins and 1 small meme coin. The 2 big meme coins are going to be very reflexive to market moves, which means that if the market moves up, these meme coins are going to fly up. And if the market moves down, well, these meme coins are going to go down much, much, much quicker than the market. And I'm okay with it because 80% of my portfolio is actually invested in really, really, really strong fundamental stuff. Or in fact, 85% because I just put 5% into Pump Fun, right? And so now what I'm going to do is I'm going to allocate 5% into 2 big meme coins and 5% into 1 stinky, smelly, degenerate, disgusting meme coin, which is either going to do 100x or go to 0 and get me completely wrecked. So for this portfolio, the 2 meme coins that I'm going to go for are Useless Coin, because it's absolutely useless, and then Fart Coin. And you know my thesis on Fart Coin, hot air rises, right? That's really all there is to it. Like, I can't give you any more inside information. I can't give you fundamentals. I just know that useless is useless and Fart Coin will hot air rises. You don't have to choose those meme coins, but take 5% of your portfolio and put it into 1 big meme coin and take 5% of your portfolio and put it into another big meme coin. All right, lastly, we're going into like my degen meme coin pick. I'm looking for something with under 20 million or $25 million market cap, and I'm looking for something that can go 10x, 20x, or 100x. And again, here I can't help you because just what you like versus what I like, and we're pretty much just throwing dice. I'm going to throw my dice at 𝗦𝗡, and it's trading at about a $3 million market cap. As I said before, I'm happy to allocate 5% to 𝗦𝗡, 5% to Filecoin, and 5% to useless coin because 85% of my portfolio is in safe bets. So that is how I would play a $5,000 portfolio. And remember, if you've got $5,000, you're in the game and you're starting to build a real long-term portfolio. And if you play your moves correctly, at the end of the cycle, your $5,000 portfolio could be worth $50,000. And then next into $500,000 and maybe $5 million. That's my portfolio, and that's how I would invest $5,000 today. Now, if you want my $5,000 portfolio, all you need to do is subscribe to this channel, leave a comment below, and check up on your comment in the next 30 days because I may just comment and give you the $5,000 portfolio. Anyway, I'll see you again soon. Until then, trade well, my friends.